Hi, this is Palmer coming to you with another weekly forecast from OptionsSpreadTrades.com for December 22nd, 2008. We're going to look at the weekly chart for the S&P. Again, we've got the buy signal from last week at 895. This came on the 8th of December. Actually, I guess that was a couple of weeks ago now, isn't it? Now, as you can see here, the momentum is starting to build. When it crosses up over the zero line, that means there will probably be some follow-through, some continuation of this. It hasn't quite crossed over yet, but on Monday we'll see if it makes that crossover. Okay, the stochastics are still up, and we did get I guess we still do have a buy signal from the 16th on the S&P, but stochastics on the daily chart are starting to look like they're coming down. So we might see some sideways to lower movement first, and then maybe a pop back up. Okay. Again, the weekly trend is up. So we do expect probably sideways to higher markets for the near term. However, for the longer term, as you can see here, this is the commitment of traders report for the S&P. This red line down here are the commercial traders. We want to follow the commercials because they are the big players. They are the guys with all the money. These guys up here are the large speculators and the small speculators. They have been sort of holding the markets up. The large speculators obviously have a lot of money. These tend to be single traders that have done well for themselves, maybe multimillionaires, entrepreneurs, but they're individual traders, sometimes small hedge funds, things like that. The commercials generally tend to be things like banks, bigger institutions. The difference is, obviously, the commercials have a lot more money, so even though the large speculators and the small speculators maybe have been supporting the market, they can't continue to do so indefinitely. Until we see some serious commercial buying, we believe the markets in the long run, we're talking over the next few months, are going to continue to drop. And we also have to look at, this is a calendar. We're looking at the seasonals, thinking about the seasonals. Of course, this week is Christmas, so there's going to be light trading this week. Probably maybe a fair bit of volatility because low liquidity, since people are going to be on vacation, not trading. That means the markets are more easily manipulated. For the week, Monday, Tuesday, and Friday, the S&P is up 60% of the time. And then Friday begins what is called the Santa Claus rally, which is generally markets tend to rally the last 5 days of the year. The average up is about 1.5%. And that has been a recorded phenomenon since sort of 1969. Following that, we have what's called the January effect, where the first 5 days of the year, the first 5 days of January, generally tends to tell us what's going to happen for the rest of the year. In other words, if the first 5 days are up, are bullish in January, generally, sort of 86% of the time, that leads to a bullish year. If the markets of the first 5 days are down, that means the year will probably be bearish. Again, that is the January effect. It's a pretty reliable indicator. Again, it's been right about 86% of the time, so statistically we want to go with what is, well, statistically significant. Anyway, if you want to, we're going to be looking at some trades, some seasonal trades in copper and gold over the next couple of weeks. We do anticipate that we're going to have some pretty big moves coming up. So if you want to get in and make some money, please come visit us at www.optionspreadtrades.com. Thanks a lot. Have a wonderful Christmas and a happy new year. Happy trading.